Welcome. In this video, Zbcn coin pattern broken, pump coming. We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. When carefully examined on the chart, it becomes apparent that the flag pattern recently formed by the price action has a technically clear structure. This pattern typically forms after a sharp upward movement, followed by a brief period of consolidation or correction, and is expected to precede a continuation of the existing trend. The flag pattern is known as a continuation pattern in technical analysis and is often an indication that the market intends to maintain its prevailing direction. In the case at hand, the price previously experienced a steep and aggressive upward move before entering a slightly downward sloping consolidation phase. This structure can be defined by two converging parallel lines, the upper line acting as resistance and the lower as support. The price began to compress between these lines, showing decreased volatility. During this consolidation phase, a decline in trading volume may also have been observed, often one of the first signs that the pattern is technically valid. One of the most significant moments in flag patterns is when the price breaks out above this narrowing structure. This breakout signals the end of the pattern and suggests the price is preparing to continue in the direction of the prior trend, in this case upward. In the current technical setup, this exact scenario seems to have occurred. The price has broken upward through the flag, generating a strong technical signal. This breakout is not just based on chart lines, but also reflects a shift in market sentiment, indicating that buyers are regaining control. More importantly, after this breakout, the price began to pull back toward the previously broken upper trend line. This behavior is commonly observed in technical analysis and is referred to as a retest. A retest is a price movement that aims to confirm whether a former resistance level will now act as support. These types of pullbacks are considered healthy parts of trend formation, as they help shake out weaker hands and allow stronger investors to build positions. That is exactly what's happening right now. The price has returned to the broken upper line, the former resistance, and is waiting to see if this level will now hold as support. This retest process is another way to confirm the pattern has completed and the next wave of the uptrend is ready to begin. If the price manages to hold this level and shows a strong upward reaction driven by buying interest, it could signal the start of a new bullish trend. In technical analysis, price targets following a flag breakout are typically measured by projecting the length of the prior upward move from the breakout point. Based on this method, the price has significant potential for further gains after the breakout. However, this target can only be realistically approached if the retest is successful and traders view the area as a new buying opportunity. Additionally, the fact that this breakout occurred with strong volume support is crucial. If the price broke the upper line with a noticeable increase in volume, it indicates that the breakout is not merely a false signal. Breakouts without volume often fail to inspire confidence, leading traders to be cautious. But if volume remains steady even during the retest phase, it increases the credibility of a sustainable new uptrend. Psychologically, this situation is also important for traders. Many professional traders closely monitor flag patterns and base their entry strategies on breakouts followed by retests. This behavior can create a self-reinforcing market dynamic. Post-breakout buying encourages more buying, accelerating the upward momentum of the price. But of course, we can't rely solely on the flag for our analysis. Let's take a look at other metrics too. Stay tuned. When carefully analyzed on the chart, it can be seen that the price recently made an upward move and reached a certain resistance level, from which it was sharply rejected. These types of zones are typically areas closely monitored by market participants, levels where sell orders have historically concentrated and halted price increases. In technical analysis, such areas are referred to as key resistance zones and are often considered the first threshold that tests the strength of buyers in the market. When the price reaches these resistance zones and gets rejected, it can be a sign that the buying pressure is not yet strong enough. A similar scenario is present in the current market structure. As the price moves upward with momentum, it encounters a significant resistance level. However, due to notable selling pressure at this point, it fails to break through and is forced to pull back. These kinds of price behaviors are very common in technical analysis and are especially closely watched by investors. A rejection from a specific resistance level indicates that the level is indeed strong and that buyers have not yet gained enough dominance to overcome it. Another important aspect to consider is how frequently the price tests this resistance level. One widely accepted principle in technical analysis is, the more a resistance is tested, the higher the likelihood it will be broken. In this context, if the price has approached this level several times before and failed each time but is now heading toward it again, it may indicate building bullish pressure and an increased probability of a breakout. Resistance zones are often areas where investors previously set profit-taking levels. Therefore, these zones typically trigger strong sell-offs during initial touches. However, the market is cyclical, and if the price revisits these levels after a sufficient consolidation period, sellers may have weakened while buyers may be gaining more control. At this point, a breakout above the resistance level becomes a critical threshold for the continuation of the uptrend. Breaking through this level is not just a short-term bullish signal. It could also signal a potential shift in market direction. Alongside technical structures, psychological levels come into play. A level that the price has failed to surpass multiple times can, once broken, instill confidence among market participants. This can lead to increased long positions and attract new participants to the market. For the breakout to be successful, it's not enough for the price to simply move above the resistance level. It must also maintain that level with volume support. If there is no noticeable increase in volume during the breakout, the sustainability of the move becomes questionable. Low-volume breakouts are often seen as manipulative or short-lived. On the other hand, breakouts supported by high volume are considered much more reliable and technically meaningful. For the price to continue its upward movement after the breakout, the broken resistance level must now act as a support level. In technical analysis, this is known as a role reversal. In other words, an area that once attracted heavy selling pressure now becomes a zone defended by buyers. This transformation indicates that the trend is based on solid foundations and that the uptrend may gain sustainability. The fact that the price was rejected from this resistance can also present a renewed buying opportunity for some investors. During the pullback, the price may form higher lows, signaling a transition toward a bullish trend characterized by higher lows and higher highs. The formation of this type of technical structure boosts investor confidence and adds momentum to the upward movement of the price. When the technical structures on the chart are carefully analyzed, it is seen that the 200-period exponential moving average level, which is one of the most important indicators used especially in determining long-term trends, has started to assume a critical role in terms of price movement again. This indicator, which has served as support and resistance many times in the market history, is an important technical tool that investors refer to, especially in determining direction. Therefore, the positioning of the price above or below the 200 EMA should be evaluated not only with a short-term interpretation, but also in line with medium and long-term expectations. Looking at the recent price action, the market had previously dipped below this average and remained under pressure for some time. These downward movements had caused investors to be cautious. Comments that the trend was weakening increased, and the appetite for buying declined somewhat. Now, however, the fact that the price has rebounded to breach and settle above this important technical level is considered to be a very positive and promising development in terms of technical analysis. The 200 EMA shows us long-term trends. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.